Hey dividend investors, today this is kind of a bonus video. This is the second video of the day, but what we're going to be talking about today is, of course, the bank earnings. Today is the first day of Canadian bank earnings, and we have seen BMO as well as Scotiabank release their earnings. And of course, these were blowout quarters for the Canadian banks. Now, I kind of suggested this about a month ago, saying that it's going to be good because, of course, the Canadian banks essentially print money in Canada. They don't physically do it, but what I'm saying and how I'm saying it is the fact that they just make money hand over fist. A lot of people who have been getting stimulus checks in the States for companies like BMO who have US businesses or a business in the US, they charge the government or the citizens, depending on how much money they have, to bring in those checks, to bring in that stimulus money. And we seen the report a few months ago saying that a lot of the American banks made billions of dollars doing this. And as soon as I seen that, I was like, wow, no matter what, these banks are going to make money. This is a given. We should all know this. They charge for everything. They charge for their service. What's their business? Their business is money. So let's really look at Scotiabank and then BMO really quickly, and let's see what's going to happen into the future. So in this first article that we are looking at is a BNN article, Scotia tops Q1 estimates despite a 35% plunge in international banking profit. Why is this interesting? Well, they beat, right on that top line right there, the bank's net income for the 3 months ending January 31st inched up to $2.39 billion from $2.33 billion. So they've been making a killing on the Canadian market, but also a lot of other markets around the world, but their South American profit isn't exactly the best, but that's totally okay in this case. We also seen now at the top line here, Scotia, which is often billed as Canada's most international bank, was held back by that title in the last quarter as the bank's adjusted profit from overseas operations went down 35% year over year to $398 million. However, this bank is essentially, in my opinion, printing money. They are making a ton, because if they are making a bigger earnings than they did a year ago during a pandemic when Ontario was in lockdown, you have to really look at these earnings and say, my God, that's amazing. Now, their CEO was just recently on BNN, literally maybe like 10 minutes ago. And he was saying that once the Canadian government allows companies to buy back their shares once again, they are going to be buying back shares. What does this tell us as investors? It tells us that, yes, like what the CEO says, their stock price is undervalued. And we can see that versus the other banks in Canada when it comes to their PE ratio. I think their PE ratio was roughly around 13.8, 13.9, while many other banks in Canada are well over 14. BMO is actually another one that is undervalued when it comes to PE ratio, and their earnings destroyed the analysts again. And we'll talk about that in a few minutes from now. But something else about Scotiabank is the fact that they have a pretty good dividend percentage-wise versus some of the other banks too. So that is really pushing us, or at least myself, into buying more of their shares. Another thing that we have to look at is when banks start making more and more money, like a 3% increase year over year is pretty good, they're going to be raising dividends. I don't think they're allowed to as of right now because obviously the government doesn't want all this money that they're essentially giving to the banks to be put into the investors' pockets. But once they're allowed to, I'm going to say probably the fourth quarter of this year, when they really release the third quarter earnings, I'm going to assume that they're going to be upping their dividend quite substantially, especially for BMO. Let's get to BMO and I'll talk about that for a bit. Okay, so BMO beats estimates as U.S. profit surges 67%. That is absolutely huge. At the top paragraph, Bank of Montreal opened fiscal first quarter reporting season for Canada's big six banks Tuesday morning with a substantial profit beat fueled by growth in all of its major divisions and a sharp drop in loan loss provisions. That's huge. BMO's net income for 3 months ending January 31st rose 27% year over year. Now you have to admit, that's ridiculous during a recession, and that is absolutely ridiculous during a pandemic. On an adjusted basis, the banks earned $3.06 per share. Analysts on average were expecting $2.15 in quarterly profit, which is just insane. Let's face it, that is amazing. And that is why BMO's stock is currently up well over 2% today. And I don't think that they're going to be allowed to up the actual dividend right now. But usually when companies have that kind of a growth and they pay a dividend, they have a massive increase in dividend, usually on the factor of about 10% or so from what I've seen. Now, I'm only 30 years old and a random guy on YouTube, so you should probably never listen to me or any of my stats, but you could do the research yourself and you'll probably come across roughly the same. And from there, that would be huge. So let's say, for example, you were making $1,000 a year on their dividend. If they were to upgrade their dividend or increase it by 10%, that's an extra $100 a year that you are getting paid. So that is amazing. If this could happen, again, probably near the end of this year, if not the beginning of next year, there's going to be probably a massive increase to dividends from the Canadian banks. That's what I'm personally thinking. Now, of course, this is just my own personal thoughts. Now, at the second paragraph on the page right now, it says the bank's core Canadian banking operations posted a more muted profit growth with an earnings increase of 5% in Canada. Now, this was sort of expected on my part. I didn't think that the banks would be an absolute killer on the Canadian market, and the reason for that is just basically Ontario has been in lockdown, same as Quebec. Those are two major areas and sectors in Canada, and that's why I was thinking that the Canadian earnings wouldn't have been all that great. But any of these banks that have international operations, I'm going to tell you right now, TD, CIBC, those are going to be absolute killers coming up in a few days when it comes to earnings. At least in my opinion and my thoughts. I hope that you have enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.